Hello, everyone, again. Apologies for the technical difficulties. Third time's a charm, so I'll start again. Hi, everyone. Thank you for joining me. Welcome to the Vincents Quarterly Tax Update for March 2018. My name is Ben Hitchings, and I'll be your presenter today. There hasn't been a huge amount of activity this quarter, as Parliament only resumed in February, with the usual disruptions to the start of the year with Easter, etc. There are, however, some upcoming changes effective 1 July 18 in relation to GST and STP, which we'll touch on shortly, as well as the end of the FBT year, which finished only a couple of weeks ago on the 31st of March. So firstly, I'll be going through single touch payroll, or STP, which a lot of you would have no doubt heard about through various sources. Secondly, some upcoming changes in relation to GST, in relation to importing goods and property development. Number three, we'll be talking about electronic record keeping, which is becoming probably more relevant as more businesses are moving to paperless offices. And fourth and final, everyone's favourite FBT. Okay, STP, or single touch payroll. So this is going to start 1 July 18. It's set to change how employees report and lodge their annual pay-as-you-go payment summaries and employee payroll information with the ATO. And in theory, this will save everyone involved a lot of time and hassle. With STP, your payroll system will synchronise with ATO reporting, making it more efficient and reducing administrative duplication. So what do you need to know? Firstly, whether or not you are a substantial employer, so that is whether you have more than 20 employees. You can do this simply by doing a quick head count now, any time now up until 30 June. Or if you look like you're going to be over 1 July, you need to register as well. So if you are a substantial employer, we recommend that you make sure your payroll software is STP enabled by 1 July 18. And it's worth noting that the major accounting software providers, being QuickBooks, Xero, Mild, etc., will be STP compliant by 1 July 18. Different software providers will also have different levels of support, so I suggest you familiarise yourself with how that's offered, and also subscribe to their newsletters to get up-to-date information on this service, as 1 July is only a couple of months away. Our good friends at the ATO are also producing a lot of content surrounding this rollout, so I also recommend you jump on their website and have a look around and get any additional information there. So the ATO can grant a reporting exemption if you're located within a rural area without internet connection, or if you're classed as a substantial employer for only part of the year. So if you have something that creates a large rush of employees, for example, harvesting and things like that. The deferral, so you can potentially defer your STP reporting date if your payroll provider or your software won't be STP reporting ready by 1 July 18. If you've entered into administration or liquidation, hopefully not. If you've been impacted by a natural disaster, also hopefully not, or if you're affected by a circumstance outside of your control. And then if you're not a substantial employee, you can still choose to report through STP from 1 July 18. However, it won't be compulsory until 1 July 2019. It's also important to communicate this to the people in your business who this will affect, obviously most of your employees, but specifically your payroll and HR staff. And finally, prior to 1 July start date, I also recommend you do a full review of your payroll system. Review your payroll rates, your superannuation, pay-as-you-go withholding, things like that, to ensure they're correct. And also make sure all your employee details, i.e. their names, addresses, dates of birth, etc., are correct and up to date in the software, as this information will obviously be passed on to the ATO now. Okay, upcoming GST changes. Firstly, GST on low-value imported goods. So again, effective 1 July 18. So the government's passed law recently reducing the threshold on the value of imported goods subject to GST. GST will now apply to sales of low-value goods to consumers in Australia effective 1 July 18. Previously, this threshold was $1,000, but this change will now mean that all imported goods, irrespective of their value, will be subject to GST. So any businesses out there that meet the GST registration turnover threshold of $75,000 will need to register. They'll need to charge GST on applicable sales and remit remit to the ATO on their activity statements. Further details can be found at the ATO website there with those to that link. This is pretty significant for property developers. So the process for paying GST on new residential property and proposed residential land will change, also effective 1 July 18. The recent amendments to the GST laws requires the purchaser to withhold and pay to the ATO the amount of GST payable on the property transaction. The developer is obligated to provide notice to the buyer, and the GST will be paid before or at settlement direct to the ATO. This has been done to ensure that all developers meet their GST obligations to the ATO in full and on time. So these changes will apply to contracts entered into after 1 July 2018 or for contracts entered into before 1 July 18, which settle after 1 July 2020. These requirements apply to the following sales of residential property. So new residential premises, for example, off the plan residential units or townhouses, house and land packages, and also potential residential premises where land where residential property is permitted but does not currently contain residential buildings. Okay. So prior to the property settlement, the developer is required to provide some information to the buyer, being the developer's name and their ABN, the amount of GST required to be paid by the buyer, and when the GST has to be withheld. When the buyer has to pay the withheld GST amount. This is likely to be payable on or before settlement, but likely at the time of settlement. So the amount of GST withheld will generally either be 10% of the contract price or 7% of the contract price if the margin scheme is applied to the sale. So practically, the developer will declare the sale and the applicable GST amounts in their activity statement, and they will receive a credit equal to the amount withheld at settlement. For any property developers currently listening, we recommend that you review the GST treatment for current or proposed developments where contracts are likely to be entered into after 1 July 18. Also make appropriate investigations with your financiers as to how debt repayment has been structured. And these changes will impact on the business cash flows as you will effectively now be remitting the GST on the sales at settlement instead of at the time of due date for your activity statement. Okay, our third topic, electronic record keeping. So again, this has probably got specific relevance, as I said earlier, due to more and more businesses transitioning into a paperless office. A lot of businesses now are saving their records electronically rather than the traditional filing cabinet method. So in February, the ATO issued taxation ruling TR 2018/2, which explains the ATO's view on record keeping in electronic form. The ruling includes several principles as follows. Pardon me. So records stored and or recorded electronically are recognised as documents for tax law purposes the same way as a piece of paper or a physical record would be recognised. If carrying on a business, records must be kept in a fashion that explains all transactions and other acts of the business engages in that are relevant for any purposes of the income tax legislation. They must also be kept in a format that can be easily accessed and understood by the ATO to ascertain your income tax liability. Original paper records do not need to be kept unless a particular law or regulation requires a paper copy to be retained. So the records of all the business transactions relevant to income tax must be kept and include, as a minimum, the following information: the date, the amount and character of the transaction. Copies of the original paper records need to be true and clear electronic reproductions, and the taxpayer is essentially responsible for ensuring that the electronic records are secure, accurate and maintained in accordance with record keeping requirements. The ruling notes that the electronic records are subject to the same record keeping requirements as paper records or physical records. So they must be true, not altered or manipulated, generally retained for 5 years after the records were prepared or obtained, or the transaction completed, whichever occurs later. They are capable of being retrieved and read by the ATO when required, and they must be in English or in a form that can easily be converted to English. Okay, exciting. FBT or Fringe Benefits Tax. Okay, so 31st of March 2018 marked the end of the 2018 FBT year. If you're an employer that has provided any non-salary benefits to employees, you may have an obligation to prepare and lodge an FBT return with the ATO. FBT is the tax employers pay on certain benefits they provide to their employees, including their employees' family or their associates. The benefit may be in addition to or part of their salary or wages package. And FBT law includes various categories of fringe benefits and specific valuation rules for each category, so it's a very complex area. And you will need to pay FBT even if the benefit is provided to an associate of your employee, which I touched on earlier, by way of a third-party arrangement with you as well. So there's plenty of types of fringe benefits. So to name the main types, we've got car fringe benefits, car parking fringe benefits, entertainment, expense payment fringe benefits, housing fringe benefits, living away from home allowance, property fringe benefits, board fringe benefits, debt waiver, loan fringe benefits, residual fringe benefits. So I'll now go into more detail into the more common types of benefits we come across that you may apply to your employees. So cars, obviously a big part of FBT. So cars are by far the most common FBT or fringe benefit. Essentially, this type of benefit arises where an employer's car is used by an employee for any private purposes, including home to work travel or work to home travel. This includes, notwithstanding that the car is also used for business purposes as well. So generally, this situation arises where an employee is provided with a car for travel between home or work, or uses the car for any other private use. If a car is garaged at or near the employee's home, it is still taken to be available for their private use. Similarly, where the place of employment and residence are the same, the car is taken to be available for the private use of the employee. The following vehicles are cars, or considered to be cars: so motor cars, station wagons, panel vans, and utilities, excluding panel vans and utilities designed to carry a load of 1 tonne or more. All other goods carrying vehicles designed to carry less than 1 tonne, and all other passenger carrying vehicles designed to carry fewer than 9 occupants. Car parking fringe benefits. So FBT is applicable to certain car parking benefits provided to employees. The car parking fringe benefit arises only if all the following conditions are satisfied. And there's a few of them. So the car is parked at premises that are owned or leased by or otherwise under the control of the provider, usually the employer. This includes a permanent parking space in a commercial car park. It must be within a 1 kilometre radius of the premises on which the car is parked. There is a commercial parking station that charges a fee for all-day parking, which is more than the car parking threshold, which is $8.66 for the 2018 FBT year. The car is parked for a total of more than 4 hours between 7 a.m. and 7 p.m. on the day. The car is owned by, leased to, or otherwise under the control of an employee or provided by the employer. Continuing on from that, the parking is provided in respect of the employee's employment. The car is parked at or near the employee's primary place of employment on that day. The car is used by the employee to travel between home and work or work and home at least once on that day. And the commercial parking station referred to above must also be, at the beginning of the FBT year, charge a representative fee. All-day parking that is more than the car parking threshold, that's a mouthful, which is that $8.66 which I was referring to earlier. The payment or reimbursement of casual car parking in a commercial car park is subject to FBT as a car parking expense payment fringe benefit. So there are some small business concessions. So if you are a small business employer, car parking benefits you provide are exempt if the car parking is not provided in a commercial car park. You are not a government body, which I don't think anyone listening would be. You were a small business entity for the last income year before the relevant FBT year, or your total income for the last income year before the relevant FBT year was less than $10 million. For this purpose, your income includes ordinary income and statutory income as defined under the Tax Act, that is gross income before any deductions. Entertainment. So this is one of the more complex areas of tax law. Depending on the type of entertainment provided and the circumstances in which the benefit was provided, the entertainment could be one of any number of types of fringe benefits discussed. So the different types of fringe benefits that arise are, or could be, a meal entertainment fringe benefit, where the fringe benefits are provided by way of or in connection with food or drink. An expense payment fringe benefit, for example, movie tickets purchased by an employee and reimbursed. Property fringe benefit, for example, providing food and drink. A residual fringe benefit, for example, providing accommodation or transport. Meal entertainment is probably the most common form of benefit we come across, and it consists of entertainment where food and drink is provided. Travel and accommodation in connection with the entertainment is also included. Generally, sustenance expenses are not meal entertainment expenses, or not for FBT. So these include staff amenities, morning and afternoon tea items, deductible travel from home relating to local or overseas travel, and eligible in-house meals, and also food and drink provided at seminars. Expense payment benefits. An expense payment benefit arises where an employer pays or reimburses private expenses incurred by employees, including directors. There's plenty to choose from. Following are a couple of examples of expense payment fringe benefits. Children's school fees, home office computers, private telephone accounts, rates and lands taxes, electricity, medical health, insurance premiums, travel expenses, driver's license, mortgage payments, holiday transport, casual car parking. In most cases, where the employee would have been allowed a once-only tax deduction for expense, if the employer had not reimbursed it, then the taxable value for FBT purposes is reduced to nil, to the extent that the expense is tax deductible to the employer. Living away from home allowance fringe benefits is also a reasonably complex area, and there's a few ins and outs that we need to consider. Living away from home allowance benefit arises where an employer pays an employee an allowance to compensate for additional expenses or disadvantages suffered because the employee was required to live away from their usual place of residence for employment purposes. It's a mouthful. The following requirements must generally be satisfied. So the employee was required to live away from their usual place of residence. The employee must pay an allowance in addition to their salary. An allowance must be paid in respect of employment. An allowance was paid to compensate the employee for additional non-deductible expenses and other living disadvantages incurred because the employee is required to live away from home to perform their employment duties. So unless all four of these conditions are satisfied, the amount paid to employees is accessible to them as a normal allowance. There have been some changes made to living away from home allowance benefits. Access to tax concessions, these came into effect October 2012. Access to tax concessions for living away from home allowance will generally be limited to 12 months for an employee at a particular work location, and to cases where the employee maintains a home in Australia at which they usually reside, and it is available for their immediate use and enjoyment throughout that period. The employee can substantiate all expenses incurred on accommodation and food or drink, and the employee provides the employer with a declaration relating to living away from home. So there's special rules that cover fly in, fly out, and drive and dry out basis too, so they're not really covered there. Property fringe benefits. So a property benefit arises where an employee is provided with property free or at a discount by an employer. So property includes goods, for example, items of clothing or a TV. It includes real property such as land and buildings, and also other properties such as shares and bonds. Food and drink consumed by current employees on a working day on the employer's premises is an exempt property fringe benefit. So there's a lot of exemptions within the FBT legislation. It's quite difficult to cover off on all of them. The following items are examples of tax deductible but FBT exempt items that an employer can provide to an employee, provided it is used primarily in the employee's employment. So these include, as you can see, mobile phones, protective clothing, briefcases, calculators, tools, computer software, portable electronic devices, laptops, portable printers, things like that. So for FBT, what do you need to do? So you'll need to review the benefits you provided to employees during the year ended 31 March 2018. If you have provided a fringe benefit or you're unsure, we recommend you contact your accountant to discuss your obligations and to determine whether you will be required to lodge an FBT return with the ATO. For any car fringe benefits provided, obtain an abdominal reading at 31 March 2018 for any vehicles used by employees for private purposes. And finally, you may also be required to get some signed declarations from your employees, depending on the fringe benefits provided. Again, jump onto the ATO website. There's a comprehensive list of declarations that you may need to have completed. Okay, so that's the end of today's presentation. As I said at the beginning, it's not a huge amount to cover off this quarter, but you can see what we've discussed. It sort of adds to the ongoing complexity and the operation of your business. So if there's anything you'd like covered off in more detail, or if you have any other queries in relation to today's content, please feel free to contact me direct or your regular Vincents contact. They'll be able to assist you as well. Thank you all for dialing in. That's the end of today's presentation. Thank you.